Good afternoon, everybody, or good morning, depending on where you're at right now. I just want to make sure before we get started here that you guys can all hear my voice and see the screen right now. Can you guys all hear my voice and see the screen? Just leave a little shout out here in the chat box for me. Let me know. Great. All right, so we'll wait just another minute or two here. I know we had a 12 p.m. start time, but I still see some people filtering and shuffling into the room here, so I'm going to go ahead and just wait a minute or two. How's it going, Mark? I'm glad you found your way in. Before we get started, so anyone who's just a minute or two late has the chance to catch the presentation from the beginning, just to kind of give you guys a general idea of what we're going to be talking about today. We're first going to do a very quick, like literally 3-minute overview of what binary options actually are and kind of the basics of how they work. Then we're going to talk about a technical indicator that I use to trade binary options called the Ichimoku cloud. And we're going to go over an example of what the cloud looks like using just a random chart. I found one that will be easy for us to read and see, and then we're going to go over how I use the Ichimoku cloud in a strategy that I call triple confirmation to find binary options trade setups. So we'll actually take a look at a trade that I made today as well. The trade that I made today is kind of in the middle of working itself out here. If we take a look and this is the trade that I put on. If we take a look, you can see that I'm down a little bit of money in this, but this is one of the 3 positions that I put on this morning. 2 of them have already gone to max value, and this one I got in for 50. I've already taken one profit target at 75 in this, so I actually am almost close to break even on this one. So it's regardless, I know that no matter what happens in this one, even if this final piece goes to 0, I am guaranteed a profit today in my binary trading using this strategy. So we'll go over that, why I took the signal, how to flag them, and things like that once you guys have a general idea of what the Ichimoku cloud is and how it works. Okay, so we're going to go ahead and start here in just about 60 seconds. So bear with me for just another minute, and we'll jump into the presentation. Okay, so let's go ahead and jump on in here. So today we're going to be talking about trading currency pairs with multiple confirmation. I've already kind of given you guys a general overview of how the presentation will go, what we're going to cover. So let's go ahead and jump right on in here. Before we do, I'm going to read our standard boilerplate risk disclaimers. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Day trading, short-term trading, options trading, swaps, and futures trading are extremely risky undertakings, generally not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades or recommendations or advice. We cannot be sued for losses of capital. All trades are for educational purposes only. Please contact your broker or registered investment advisor for execution, margin, and capital requirement questions. Everyone watching the presentation adheres to disclaimers on optionhacker.com and alphashark.com. Okay, so my name is James Romelli. I'm an active trader in stocks, equity options, and binary options here at Alpha Shark Trading. I'm regularly on CNBC, Bloomberg, Fox Business, BNN Canada. So maybe you've seen me on TV before, maybe you haven't. I also write regularly for a number of online financial news publications. So if you haven't seen me on TV, maybe you've read something I've written in the past. If you haven't done either of those things, then nice to meet you. But I spend all day long in front of my computer screens watching markets, trading stocks, equity options, and currency pairs using binary options. So this is a part of my overall trading strategy. I do a lot of different things in different markets, but to be honest, this year so far, equity options and stocks have been kind of tough. Very tricky to trade. Declining implied volatility environment, coupled with this kind of strange trading range that we've been in, has made that very difficult. But when that happened, I noticed that currency markets, particularly using the strategy we're going to discuss here, were trading very consistently. So I've been focusing quite a bit on trading binary options on an intraday basis using a number of different intraday expiries in various currency pairs. Now, I don't take signals in every single currency pair. I don't trade every single one every day, but I have a system that I use to figure out which ones I really need to be paying close attention to on a day-to-day basis. Right now, there really is only probably like 2, maybe 3 pairs of the 10 that Nadex lists that I would even consider taking a trade in. We're going to talk all about how I make that determination as we go further on into the presentation here. But binary options, for those of you that don't know, and I think most of you probably do know, are a financial instrument listed and traded on the Nadex exchange. Nadex defines them as a security that asks a simple yes or no question. Will this market be above this price at this time? If I think yes, I buy the option. If I think no, I sell the option. There are only 2 different settlement values that can happen at expiration for a binary option. Hence the name binary option. It's a binary outcome. It either is worth maximum value of $100 or it is worth nothing. Okay? So a lot of traders look at that and they automatically think that it's a risky approach to trading markets that maybe they're already trading in. Well, wow, I can trade this contract and I either make a profit or lose everything. That sounds very risky. But when we consider the way that these options work, and compare them to how a trade setup might be structured in the underlying, we actually see that in terms of risk management, these are a much more efficient and effective way to express a view on an underlying market. Now, just so I have a general idea of where everybody kind of stands right now, how many of you here have never actually traded a binary option, either in a live account with actual money or in a demo account? How many of you here have never done it, have just never done it? Jackie. So a few of you, yeah. A few of you, that's what I kind of expected. So, what is it that has kept you from, pulling the trigger and making a trade? Maybe you don't really have a good idea of how these work. Maybe you're in that camp that I just kind of described where you look at these and think that they're a little too risky for you to be trading in. But as the trader like myself who trades in a number of different asset classes, I can tell you that in general, I find the best reward to risk setups and kind of the most capital efficient setups in binary options trades. It's something that lets me approach the market in a way that doesn't really give me, or that I couldn't really replicate in other markets. So, with that said, let's jump into the actual trading plan. So those of you that haven't traded a binary option before, that's fine. The Ichimoku cloud is something that I think lends itself really well to trading binary options. Few of you are already saying that you have some experience with the Ichimoku cloud. It's something that can be used, it's a technical indicator that can be used in pretty much any market out there. You don't need to have a really strong technical analysis knowledge base to use these things effectively. It's nice as well because for those of you that maybe don't have have a platform that offers this, it's actually in the Nadex platform. So this is what it looks like in the Nadex platform. We're going to go over some examples and show you guys what the levels look like using a chart that I took from a different platform, and the only reason I did that is because I want you guys to be able to see it really clearly here in the webcast environment. But the Ichimoku cloud is simply a technical analysis method that uses past, present, and future levels to help traders identify at a single glance if a security is in bullish or bearish territory. Okay? The Ichimoku Kiko-hyo is the full Japanese name of the study, and it actually translates to one-glance equilibrium chart. And this is the whole point of the Ichimoku cloud. It's supposed to be something that I can use to really, really quickly evaluate whether or not a security is trading in bullish or bearish territory. And that is something that I think lends itself really well to this type of trading, because if I'm looking at a number of different markets and a number of different assets, I want to be able to tell very quickly without doing an in-depth analysis whether or not those underlying assets are trading in bullish or bearish territory. This is particularly beneficial for binary options traders because we're always, at least for the most part, dealing with short-dated expirations, right? We don't really have the time to spend a half an hour doing technical analysis on a trade setup when I, might only have a couple of hours or even less than that until expiration. So the cloud is made up of 6 key components, each of which we're going to take a look at individually. We combine them, and we then get and construct the Ichimoku cloud. Now we're going to go over all the individual names of the components here, and this really is the last time that you'll have to even think about what the components are called. It's not really all that important to know what the names are, but it is, I think, important to understand what it is they're telling us. I don't even really have to have like a super solid understanding of how these levels are calculated. We're going to go over that, but to use it in actual practice, I don't really think that you need to be using a really solid understanding of how the calculations work. More so just what the levels are telling me at each given point. But here are the names of the 6 components. The Tenkan-san line, the Kijun-san line, the Senku-span A and B lines, the Kumo, and the Chinku-span line. Okay? Each of these are calculated differently, and what you're going to see is that the calculations for these are fairly simple. The Ichimoku cloud is essentially a moving average set. Okay? The Ichimoku cloud is essentially a moving average set. And what these moving averages are looking at is a combination of different time frames. So we get a comprehensive view of trend on a chart for any given security, or only looking at price action and price momentum here. So this is what it looks like on a chart. This is actually a chart of an equity, but I used it because the levels are nice and drawn apart here, and we can see them really well in a webcast type environment. The first component of the cloud is the Tenkan-san line. It's a short-term trend line similar to a 10-period moving average, and it's calculated by taking the highest high and the lowest low, dividing it by 2 over the last 9 periods and plotting it under the current bar. So what that means is that the green line that I see here has been calculated and plotted in real time using the past 9 bars worth of data. Okay, and essentially what this is and what it shows us is the first level of support when we're above the cloud. So here we can see we've got a pretty nice upward sloping trend line. The actual shaded part here is upward sloping as well. And if I were to be looking at taking a trade in this particular asset, and really it doesn't matter what it is, I could take the name off the top of the chart. This would be my first level of support. Okay. Some traders like to use this as a level to enter a trade on a pullback. So as we break above the shaded area, every time we touch off of this first level of support, it could represent an opportunity to add to a long position or to enter a new long position if I missed the initial break. Okay, so what this means is that I can use that as a first level of support for entry or for what we might consider a stop loss or an exit point once we're above the cloud. If you want to know how this cloud works at its very most basic level, it's super simple. If you take nothing else away from this presentation, make it this. If we're trading above the shaded area, we're in bullish territory. If we're trading below it, we're in bearish territory. Okay? So that's where the one glance equilibrium component comes from the Ichimoku cloud. The one glance equilibrium component means that we can look at it and see right away if we're above, below, or inside the cloud and determine very quickly if we're in bullish, bearish, or neutral territory based on this time frame. Now we're going to talk a lot more about that time frame, which time frames I should be using as we go further into the presentation. After you have a basic understanding of this indicator, that is the next thing that you need to know. But let's get through the rest of the components here. So the second component of the cloud is called the Kijun-san line. It's the red line that you see here on the chart, and it's essentially our second level of support while we're above the cloud here. The Kijun-san line is a longer-term trend line. It looks at more bars worth of data. It's the highest high and lowest low divided by 2 over the past 26 bars plotted under the current bar. Okay. Again, this is a level that I can use for support for whatever purposes I need that support level for, either to add to a position, either to stop myself out of a trade, or to enter a new long if I'm waiting for a pullback. Okay, so what do we basically have so far on the cloud? Well, we basically have a fast and slow moving average. Okay, so these things can tell me information by themselves, right? What would I be able to say about the strength of trend if the 9-period moving average suddenly moved below the 26-period moving average? Is the trend still as strong? Is it still as well sustained as before? What do you guys think? Yeah, it could be a clue that the trend is starting to get exhausted, starting to weaken itself. So now, in addition to this check that I can make by just looking at the chart and seeing we're above the cloud in bullish territory, I also have a faster moving set of moving averages that I can look at to see if the trend is losing momentum, if it's starting to get exhausted, or if it's a potential reversal situation as well. That can clue me into something that I can use to manage my position also, right? So after we have these two moving averages that act as our fast and slow period moving average, we then form the future cloud, or the forward-looking component of the cloud. And I think that this is where a lot of traders kind of start to get confused about the Ichimoku cloud and don't really understand what it's telling them. Essentially, the Senkuspan A line forms one of the bounds of the shaded area that you see here. Okay, the Senkuspan A is a moving average of these two moving averages. That's where I think people start to get a little confused, right? We take a moving average of these two moving averages, but rather than plotting it under the current bar, we plot it 26 bars into the future. Okay, so that means that if we were to draw a line straight down to the Senkuspan A under today's candle, that was actually plotted there 26 days in the past, okay? If we're looking at a daily bar, it's going to be 26 days into the future that we plot it. If we're looking at a 5-minute bar, it's going to be 26 5-minute bars into the future that we plot it. If we're looking at, so that's a good question. So why 26? So the reason that it's 26 and not 20 or 30 has to do with the fact that this is an indicator that was developed in Japan. At the time, the way that the markets worked, 26 was 26 days is what essentially, made up the trading month. So that is why it uses 26 and not a round number. That might make more sense, right? People ask me that all the time. Why is it 9 and 26 and not 10 and 30, right? And the original development of this thing, that was the reason. And what practitioners have actually found through testing is that tweaking those levels to, something that might sound a little bit more pleasant or line up with other things we might normally use didn't really change that much the effectiveness of the indicator. There are some people, and there's not very much literature about this thing. There's really only 3 or 4 books that were written about it. Some people like to change the period lengths and also moderately tweak the calculations for the levels, but what we've found and in practice and in our research is that we really shouldn't be doing that. We stick with the default settings. So if you look in your trading platform, and the Nadex platform uses the default settings as well. If you're looking at that, you have the ability to change your short, long, and signal periods in the Nadex platform, but I wouldn't do that. I don't do that. I just use the default settings. That's a good question, though. Thank you. So what this forms is one of the bounds of the cloud, right? And when the Senkou span A is on top, it shows us that the cloud is upward sloping. The second bound of the cloud, the Senkou span B, is calculated by taking the highest high and lowest low, dividing it over 52 bars back, and then plotting it 26 bars forward. Okay, so this line has the most data in it. It uses the longest period moving average to create this point on the chart. And again, what this can show us is when trend might be losing momentum, when we might expect trend to be exhausted. What we look for in a setup like this is this future cloud still upward sloping? And what that tells me is that the price action and momentum is strong enough that I really shouldn't have much reason to believe that it's going to slow down anytime soon or reverse anytime soon. Now, if this were to start to slope lower and the Senkou span B became the top line, then that would be a downward sloping cloud. That'd be an indication that maybe the trend is starting to get exhausted. So basically what I'm given in using the Ichimoku cloud is a bunch of different checks that I can make on trend. Okay, so let's go through this chart and try to say whether or not it's a strong bullish, sort of middling bullish setup, or something else other than that. Well, what's the first thing to do? Are we above or below the cloud, the actual shaded area? Well, we're above it. One check for bullish. Are we above or below the 9-period moving average? Well, we're above it. Another check in the bullish column. What about the 26-period moving average? We're above it. Another check in the bullish column. How are these related to each other? Well, the 9 is above the 26. Another check in the bullish column. How are these lines related to the actual shaded area of the cloud? Well, they're both above the cloud as well. Another check in the bullish area, right? How is the cloud looking going forward? Well, it's upward sloping. Another check in the bullish column, right? So what we're able to do is kind of filter out weaker setups that don't agree with the trend and price action and momentum according to the Ichimoku cloud. So you see that I can look at any chart for any market and go through just like I did there and figure out how strong the trend is, right? And I think a lot of traders look at this forward projected part of the cloud and expect that to give them some type of guidance on where exactly the market is heading, to what price level, and it doesn't work that way. All this is showing me is how strong the current trend is, okay? So the shaded area in between the Senkou span A and Senkou span B line is what we would call the Kumo, and I actually think that Kumo is Japanese for cloud. But what this shows us is kind of how strong the trend is as well. If we have a strong and thick upward sloping cloud, that's better than a sort of thin and sideways part of the cloud, right? And I mean, kind of take a look at this here. understand that this little section of the cloud was formed 26 periods in the past, right? But take a look at price action as we traded above it. It was pretty sideways. There wasn't really like a super strong trend here. It wasn't until the cloud picked up, started moving, sloping upward and getting some, thickness to it that the market really, started to gain momentum to the upside. Okay. The final component of the Ichimoku cloud is called the Chinkuspan line. And really, this is something that I think could be removed from the cloud. I don't really have to have this on here. Some traders don't even look at it when they're using the Ichimoku cloud. So what this shows me is just a projection of the current price 26 periods into the past. So the idea is, well, if we're in a sustained upward trend, then this line should be above whatever the price was 26 periods ago, right? I don't think I really need something like a plot on the chart to show me that. I can just look at it and see that. But it is a component that would come up, and that's why we put it in here, so you guys have an understanding of what that is telling you. Okay. So after we know what the levels are, we have to talk about time frame. And this is the most important part of actually applying the Ichimoku cloud to your trading plan, okay? Because different assets develop trend over different time frames. And the Ichimoku cloud is an indicator that works best in trending markets. Okay, and so what I need to figure out before I apply it to a trading plan is the market that I'm looking at, where does that market tend to develop trend? Does it trend well on the 1 minute bar, the 2 minute, the 5 minute, the 30 minute, the 4 hour, the daily, the weekly, the monthly? How long does it take for trend to develop and kind of show itself? Because I need to focus on that time frame. How fast is too fast? For equities, what do you guys think makes sense? The best signals typically come from the daily bar. Something faster than that produces too many traps. But we can think about different markets and find exceptions to that rule, obviously, right? Think about different indices. Do you guys, in general, what trades faster? Does the Russell trade faster or slower than the Dow? What do you think? Does the Russell trade faster or slower than the Dow? Yeah, faster. In general, it trades faster, right? For the most part. Does the Nikkei trade faster or slower than the S&P? In general. These are the types of questions that I have to ask myself when I'm thinking about equity indices, right? The currency and currency futures generally are charted best on a 4-hour bar. Anything faster than that tends to produce too many traps. Now, the 4-hour bar isn't something we can really use to trade binary options, right? Because how many bars are there in a day on the 4-hour bar? There's 6 in a full 24-hour day. So we don't really get too much action on the 4-hour bar. I can totally use that to trade weekly binary options, but to find a day trading plan, I had to develop something a little bit different to get my signals on a smaller time frame and actually trade them actively. Crude oil futures trade very quickly. Crude, gold, things like that, I can chart them on something as fast as a 5-minute bar. So that lends itself pretty well to trading these short-dated intraday expiries using binary options. Okay, Treasury futures, other things like that, those aren't really going to be a concern when I'm trading binaries. So day trading using the Ichimoku cloud works well because the cloud works well in momentum names that tend to trend well from open to close. When we're talking about trading binary options, this is a little bit different of an approach than, if we're only focusing on equity indices. Because there is, a cash session where we get most of the action for indices, right? Most of the action in indices happens from the opening bell to the closing bell, at least on an intraday basis. When we're talking about currencies, which is what we're going to go over here specifically in a second, that is a completely different type of setup because they trade all day and all night. So what we're trying to do is find where they're going to trend well on those time frames. Essentially, what we're going to be doing is looking for breakouts and using these indications to flag potential breakouts and day trade opportunities. This can help me pick profit targets and stops as well. For binary options, I don't have to be quite as concerned about that because I have a product in binary options that sort of manages my risk for me. Okay, but let's talk about the plan here. The cloud is just a tool. I still need a plan in place. So we're going to jump in now to the actual plan that I use for trading binary options in currency markets. Before I do get into that, I want to ask you guys if you have any questions about sort of the basics of everything that we just went over. Is everybody good for now? Or anyone have any questions? Everyone have any questions? Everybody good so far? It's not a super complicated indicator, right? It's actually something that it's interesting because it's like one of those things where like I could teach you the basics of it in 5 minutes, but could also basically spend a whole day explaining it, right? Yeah, I know. I have my charts up here in the background, and I just saw the Dow sell off. Saw the Dow sell off a good amount there, and the S&P were kind of breaking lower here. Not sure why, but we'll figure that out later. Okay, so basically, here's how this plan works. I use multiple time frames to chart currency pairs, okay? And this is the chart setup that I use. And I use it in my Thinkorswim platform. But all day long on the 15-minute bar, I'm tracking all 10 currency pairs that Nadex lists binary options for, okay? And this is actually all 8, 9. This is the dollar index right here. I just kind of keep that up to have a general idea of how the dollar's moving. Now, as you can see, on the 15-minute bar in any given currency pair, there's a lot of breaks of the Ichimoku cloud. If I wanted to trade this, just kind of caution to the wind, it'd be a pretty simple trade setup. I would buy or get long using binary options anytime a pair broke the cloud to the upside, and I would get short anytime it broke the cloud to the downside. Pretty simple, right? But I know that on the 15-minute bar in currency pairs, that's going to create a fair amount of traps. But it gets chopped up a lot. So what I want to do is find a method to confirm the strength of my trade setups on the 15-minute bar, weeding out the noise or the setups that aren't going to give me the best looking type of trade. So this is what I do. And I'm looking into automating this because it's a super tedious process for me to do by hand, but it's the best thing that I have in place for it now. I track daily where we are on the cloud relative to these different time frames, okay? I'm concerned with the weekly, daily, and 4-hour bar. And as I continue to build this trading plan out, I might even add a 1-hour time frame in here as well to make an even stronger confirmation. But essentially, what I'm waiting for is for currency pairs that I'm looking at to have a setup where all 3 of these time frames are in agreement, okay? Right now, the euro-pound pair has all 3 of these time frames agreeing with each other. If we were to take a look at this, we would see that what? On the 4-hour bar, I don't know why that's taking a second to load. We're trading well above the cloud, right? On the daily bar, we are also now above the cloud. On the weekly bar, we are also above the cloud. So what does that tell me about the general pressure or price action in the euro pound right now? Is it bullish or bearish? I just was able to look at 3 different time frames, weekly, daily, and 4-hour bar. So across our medium to long, and long-term time frames, what are we looking at? Yeah, bullish. Yeah, you can chart you can look at the cloud on the Nadex platform as well. So what that means is that right now my strongest signals are going to be long signals in the euro pound futures, or in the euro pound pair. So going back to my 15-minute bar, I'm going to be looking to trade breaks of the cloud to the upside on the 15-minute bar, and any downside break I'm going to ignore. So let's just kind of take a look at the setups that we've had this week while this was the case, while we had a confirmation across all these time frames, right? What happened? Every time, and here's kind of the first break to the upside on Friday or Thursday night. Every time we broke the cloud to the upside, we saw good follow through. Here, trade inside of it, break again, nice pop to the upside there, trade inside of it, break again, little follow through there, break to the upside here, nice follow through, trade below it, break to the upside here, nice follow through, right? And I mean, like, you can just go back and continue to find these, follow through, back inside, break, follow through. So all of these signals are signals that I can trade using binary options. This morning, when I came in, I saw this. We traded inside of the cloud, albeit thin, but we broke to the upside here. So I got long on that break to the upside. Do I have to wait for the arrow to pop up? No. The arrow is actually a different indicator that I use. That shouldn't even be on here. But no, what I do is wait for a bar to break the cloud. And so the entry for the binary option, where I would look to actually put the trade on, is on the close of the first bar that breaks above the cloud, right? So there was that one. Would have been right there for that one. This morning, on that break, which happened relatively early, I put on a couple of different trades. I put on 2 at-the-money binary trades, one with an expiration at 10 o'clock Chicago time, 10 o'clock in the morning Chicago time, another with expiration at 3 p.m. Eastern, 2 o'clock Chicago time, and I put an out-of-the-money trade on 2, where I found an option that I could buy for $20 at the 10 a.m. expiry, 10 a.m. Chicago time expiry. And you can see the follow-through happened pretty aggressively here. We took out the highs for the week today in this pair. This option that I bought for 20 went to 100. The option that I bought for 55 was my actual fill, went to 100 as well. Okay, so between these 2 trades, I was risking $75 and ended up making maximum value on both, which netted me a profit of $125. Now, the trades that I put on at the time were at the money, or just a few ticks out of them, or a few pips out of the money. It was the next strike higher. If I wanted to replicate that type of risk to reward setup, which in this case I was paid off like 1.7 to 1 on my money, how would I be, how could I replicate that in the underlying? Well, I wouldn't be able to. It would be impossible, right? I'd get long here, and if I only need a small move to the upside, this $20 option was actually the one that sat right on this strike right here, the spot 87 strike. I only needed, 15 tick move to the upside. How could I get 1.71 to 1 on my money in total on average on a 15 tick move to the upside? How tight would my stop have to be? Pretty darn tight, right? Pretty darn tight. I would be chopped up in this trade very easily. Very, very easily. Now, it just so happened that the market took off higher here and never really looked back. But a lot of time, it takes a little while for it to develop, right? I might see it fall into a range. And let's look at this individual trade here. This was an option that traded on this strike, right? It was this option. It was spot 8685 was where I entered. So what did I need? I needed a 15 pip move to the upside to get paid off 4-1 on my money. So what would my stop loss would have needed to be on this particular trade? Well, I would have had a target 15 pips to the upside and a stop loss like 4 pips below my entry. I mean, I could blink my eye and get stopped out of that trade, right? How confident would any of you be in a 4-tick stop loss in literally any market you trade? Doesn't have to be euro pound. How many markets could you trade with a 4-tick stop loss and have any confidence in whatsoever that one small tiny move to the downside wouldn't stop you out of your position, right? It's very easy for that. Yeah, none. There isn't one. I don't care how slow moving any market is for a 4-tick stop. And, to get this 4-to-1 reward to risk ratio, my stop loss wouldn't actually be 4 ticks. It would be 3.75 ticks. It's not even a full 4 ticks. So it would be very difficult to replicate this type of reward to risk ratio in the underlying, right? And while this might seem like a very selective way to trade, you have to understand that these two right here, these two flip above and below the cloud pretty easily. At any given time, I have a couple of pairs that are meeting my criteria for confirmation across these time frames that I can then trade on the 15-minute bar. Every day, I usually get a signal. There's not too many days where I have nothing to trade. Most days, I get 1 to 2 signals. On like a really busy day, I'll get 4 that I can trade. So it's kind of all about me determining how I want to approach it after that. I'm always looking for a good reward to risk ratio. As you can see here, being given the type of payoff that I'm receiving, I don't need to be right every single time to make money in the long run. I can take losses because when I do make money, I'm getting a really nice payoff, 4-to-1 on my money in the example of the out of the money option. Once the bar closes above the cloud, how do I choose the best practical target? That's a good question. So it's all related to the expiration, right? It's pretty easy to trade an at the money right when that happens, right? And it doesn't really need to, I don't really need to focus too strongly on expiry for that case, right? Because I can look at the entire strip of the forex binaries that Nadex has, right? And there's an expiration every 4 hours, right? So all I really need to do is say to myself, okay, well, by 3 o'clock today, what can I set up on an even money bet or an at the money option that just says we're going to be higher, right? I put on a trade that was at the money at the time of the entry for an expiration that was about an hour and a half away, right? How many bars is that? That's 6 15-minute bars? That's something that is easy to set up. Do you understand what I mean by that, Sonny? Like if the signal is this is where I think I'm getting long, buying a binary option for me that is going to pay off at max value if we're just a few ticks or so above where we are right now always makes sense. That's always like the first thing that I do is get long the at the money binary option, right? Because when I actually took my entry this morning on the close of that bar, the closest strike was actually a couple of pips below where the market was. So that's why I had to pay 55 to get into it. So I risk 55 to make 45 on what I know is a relatively strong and confirmed signal, and I don't even really need the market to move higher. It could trade flat through expiration as long as it doesn't move below my strike price, which it was above by a few ticks at the time. Does that make sense? After that, for selecting an out of the money option, I can get a decent idea of how much the market moves over certain bars. No. The future cloud does not give me any guidance whatsoever for price target. It does not give a trader levels that it thinks the market can go to. All it gives me is a confirmation on the strength of the trend, the current trend. Does not tell me where it thinks the market's going to go. I have to figure that out for myself. That's why the at the money option for me is always the easiest and first way to approach the setup. Yeah. And then after that, I can use something like the average true range to figure out where I think the market could go, right? You know, if my average true range is, what is this, like 8 pips per bar, then I know, okay, between now and 10 a.m. expiry, there's about an hour and a half worth of time left based on the average true range. Where do I think the market might be able to get, right? Well, I thought it could get a little higher than 15 ticks higher based on that, but I'm given the ability to have a less aggressive price target and still get a 4-to-1 payoff with the option that I bought for $20. Does that make sense? So no, what I do is I enter a contract. So here I enter a contract that says, will be above the current close of the bar. Okay. This is the average true range. So it tells me, like, on average how much movement is happening in each bar. So I can kind of extrapolate a target based on that, right? If, I have 3 hours left to expiry, and, over the course of, and even I can even, use to make it simpler, I can even use something like, the hourly bar. So what's the average true range on the hourly bar? Well, on average, the range is what, 14 ticks, is that? So with that in mind, how much can I expect it to move over the course of like an hour and a half? Well, probably not a whole lot more than 20 pips. So my trade was giving me 4-to-1 on my money in the event that we get a move of 15 pips to the upside, which is what led me to that strike. And, the market is going to dictate kind of what approaches I can take, right? Like, I'm probably, like, let's say I have a projection or an expectation for the market to move, a certain amount by a certain time. Am I going to really, be able to do that? Like, if I don't have the movement that is implying a move to this level, spot 8702, well, then, I'm not going to go out there and put on a lottery ticket style trade where I'm, buying options for $5, hoping they go to 100. I have to take a different approach, right? But this morning, it was early. The setup had time to develop, and there was a good market for a option that was going to give me a great reward to risk ratio using a target that made sense based on, the cloud and how much I might expect the market to move over a certain period of time. What I'm working on right now, and I will 100% be giving you guys a presentation on this when it's done. What I'm working on right now is back testing this strategy and creating a distribution that I can use to set up better targets. So essentially what I'm going to be looking at is, okay, in a confirmed setup on a break of the cloud to the upside, what is my expectation based on historical data in these situations for movement between now and all of the listed expirations that we have for Nadex. So then I can say, okay, well, I can look at the break to the upside. All right, well, here we go. We have a break to the upside. What does this distribution tell me about what I might be able to expect by 11 p.m. expiry, by 3 p.m. expiry, by 7 a.m. expiry, and then I can use that to guide my targets after that. But that's a pretty big data project that I'll probably be working on for a little while. So I typically use the price of the option to set my targets. I don't, because binary options have a lot of gamma, right? It's kind of hard for me to look at a chart and pick a level and have a guess of what the option might be worth at a certain time if we get to that level, right? But it's easy to figure it out at expiration, right? I can say, all right, we're above the strike price, it'll be worth 100 at expiration. We're below it, it'll be worth 0. But what is difficult to do is figuring out or guessing what it might be worth anytime in between the time I put the trade on it and expiration. There's way too many variables. I can have, a general idea of how it'll move. I know the moves will be pretty aggressive. These options have a lot of gamma. A small move can change the value of the option pretty significantly. So with that in mind, I typically put out price targets. So whereas I had that option at 20, if I had a 4 lot of them on, I might stack out profit targets at like 40, 60, 80, and then maybe let the final one go on till expiration. But I didn't need to hold it all the way through. The move was aggressive, so I ended up doing that. But I can exit these things early based on profit levels that I set on the onset of the trade. Okay, so I want to take some more questions from you guys, but before I do, I want to give you guys a chance to get something that we have to offer you here. It's completely free. All you have to do is go to this link and upload your put in your email, and you'll be given a free ebook that we have about the Ichimoku cloud. It's going to explain not this strategy specifically about binaries, but it's an awesome guide to have to kind of review the basics of how the cloud works, understanding the indicator itself much better. So please check that out. Now, I also want to ask you guys a couple more questions. So please share your opinions with me on this. In general, for these webinars, what is it that you guys, want to see? Is a topic like this something that is, easy for you guys to follow? Is it, something that you would consider to be over your heads? Are you looking for more kind of basics on binary options trading? What is it that you guys would like us to cover in these sessions? If you could just leave a little note in the chat box here, if there's any topics that specifically you want to see, that would be beneficial. You want to see more on trading in the money strategies, more on currency pairs specifically. Trading lower time frames, so you want to like topics on trading really short and fast types of strategies, basics of in the money options. You have a lot of time. Easy strategies for intraday binaries. So yeah, I think that this strategy is actually pretty darn easy. I don't really have to have a super high level of knowledge of technical analysis or of the cloud really to run this trade. I just have to, have an idea, and I track it on that spreadsheet of where we're positioned relative to the cloud on all of these time frames, and then use that to find signals. And I'm always tweaking my own trading plan, as I have different experiences and find out, different kind of dynamics of these markets. And like I said, we're working on this data project now to kind of figure out the best strike approaches to use. How many trades did it take and how much time? I'm not sure what you mean by that, Jackie. Sorry. Slightly more basic. Yep, as long as price action is above the cloud, it's considered to be bullish. What's important, that's an easy analysis to do for my confirmation time frames. The weekly, daily, 4-hour bar, it's really easy to look at that and say, all right, we're above, below, inside. Does this confirm on the higher time frames? After that, my signals come off of the 15-minute bar. And it's not something where I just, I wake up in the morning and if we're above the cloud on the 15-minute bar, I'm buying everything I can. I'm waiting for breaks, confirmed breaks of the cloud. More on 5-minute binaries. More basic, yeah. So I'm going to put the link in here again for our ebook for you guys. Please check it out. It's completely free. Put your email address in on this link, and it'll be sent to you via email. You'll have it in your inbox. Feel free to go over it. Keep it as a resource. And also, I'll put my email address in here for you guys as well, in case you have any other questions. So if I take on 15-minute charts, do I choose expiry contract 4 hours out, 8 hours out? It depends. It depends on how strong the break is. So, like for example, I picked more shorter dated one, more shorter time frame ones today because the break wasn't, it was a break, but it wasn't like the greatest break I've ever seen. We traded inside of it for a second in a really thin part of the cloud. But if we wanted to find like a really strong breakout setup, I can go back and, the best setup on a breakout setup is something like this, right? Where we were below the cloud and we've broken above it, and it's come through a thick part of the cloud here. It requires a lot more conviction from the market to get through this area and of neutral price action and trend into bullish. And here's the close of this bar. I mean, this trend continued for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 15-minute bars before topping out and reversing. That's a pretty long time. That's about 4 hours. I think in general the expiry 4 hours out is one that I can use kind of as a basic starting point. Those breaks that happen like that tend to run longer or can run longer. Find a good one. I mean, here's another good one where we actually came from below the cloud to above it. And what's nice about binary options is I can very cheaply on a risk to reward basis set up something that will keep me in a trade in case we have like a really long drawn out break like this. Like the trades I put on this morning, those were kind of designed to make money if we continued higher, not at a blistering pace, but continued higher over the next couple of hours and finish the move to the upside. I can use daily, weekly, longer term expiries. Like on a break like this, I might choose to get into trades that are shorter dated through like the first couple hours there. Then I might buy something a little further out of the money for cheap dollar amount in case, if I really expect a trend to continue higher. Reading into the candlesticks themselves, I think is a decent way to kind of get an idea of how much I think might be coming out of it. As someone mentioned, you don't care about higher highs, lower lows. So there's plenty of ways to approach it. Cool stuff. Thanks. So yeah, it seems like most of you thought that. So most of you thought this wasn't like too far over your head, right? I asked that a little earlier, and a couple of you answered. But in general, was the topic here, something that was useful and not too tough. Do I use this indicator myself? Oh yeah, absolutely. I just showed you the trade that I have on now. Traded yesterday too, using the same signals. Not ready for prime time. When the pair goes above the cloud on the 15-minute bar, how long a period binary do I select? Yeah, that depends. That's kind of what I was just talking about. That depends. Typically, I find something short dated to set up with a good risk to reward ratio that just will make money if it continues on a not on a blistering pace to the upside, but at a reasonable move, small move, and still getting a good reward to risk ratio. And then I can, if I have a lot of conviction behind the signal, I can really stack out trades that are further out of the money and longer dated for good risk to reward ratios, and hopefully, the ability to get a nice chunk of change out of it. Alrighty, guys. So yeah, it will be available on the archives. I'm going to go ahead and give you guys a link here one more time. I've kept you here for an hour already, so I'm going to go ahead and wrap it up. I'll put it into the chat box here again. alphashark.com/Nadex is the link. And I will see you guys next time around.